All right. All right. Hi, everyone, and welcome to Open Farm Days. Delighted to be here and sharing some hopefully new and interesting information for everybody. Today's talk is on financing and grants. We have some great speakers for you to share just a little bit of information. So we're going to walk through a number of different topics. Kemi, if I can just get you to go to the next slide. So what we're going to be talking about today is we're going to kick things off with Heather from Servus Credit Union, and we're going to be talking about grants and loans. We're going to pass it over to Marie-Laurie from Marie-Laurie Polidor from Futurepreneurs. That's a bit of a tongue twister for me. Chris Penner with Jelly Academy, and he is going to be talking about digital skills. Suzanne Kelly is going to talk about some of the grants that are out there for the ag societies. And then I'm going to wrap things up with a bit of information from Alberta Agriculture and some additional grants that are available through the Ag Society as well, taking a look at some of those different collaborative projects. So we've got an hour scheduled for today, and we're very delighted to be able to bring you our speakers. What I'll ask is that you hold your questions to the end of each speaker's presentation, and then we'll open the floor for any questions that you have. Today's presentation will be sent out. It'll be loaded into the host farm section, and you'll have a copy of the actual PowerPoint because it has the hyperlinks for some of the contact information. And there will be a final slide that has a one-pager just on links, emails, and contact details for each of our presenters. All right, so without any further ado, Heather, so delighted to have you here. Thank you for taking the time, and please share us a little bit of information about Servus and ag financing.
Sure, sounds good. I guess this could be a little bit of an overlap for anyone who might have been at the ACE conference, AGM, in February, as this is basically the same presentation as I did at the conference as well. But this allows everyone who wasn't there to be able to see it as well. So my name is Heather Karst. I am the Market Director for Business Banking, agricultural banking in Central Alberta. My territory spans up from Leduc all the way down to Airdrie, and everything in between. There's about a team of 8 of us between us and Connect First, as we're still working on finalizing that merge with our Connect First partners. So I'm just these are some of the topics that I'll go over today. I'll keep it relatively short and sweet, as I know we have several presenters in only an hour, but basically, this is some of the offerings that Servus Credit Union has for farms and farm businesses, and to some extent, all types of businesses. We will finance everyone. I just happen to be an ag lender only. I have been doing that for it'll be 22 years this year with about 3 different financial institutions. So next slide. So the first thing that we usually offer to farms and farm businesses would be what we call an authorized overdraft. This is our version of a line of credit that other places have. Theirs would be separate. Ours is like a very large overdraft attached to your account. So you're always paying interest to the penny of what you're using. But then we price it as if it's a line of credit at a prime plus. For farms, it's usually that prime plus 1, 1.5, depending on what you're using as security. Mortgage secured would probably be under prime plus 1. And there is a monthly fee. We call it the standby fee. It's the fee you pay to keep it active and on your account. We do base it on the farm size. A lot of the times what I'll do is I will look at the annual cash costs of the farm and give you a percentage somewhere between 65 to 75%, depending on whether or not you have other lines of credit with other institutions. And then security is based mainly on inventory. However, we can take mortgage security as well. So next slide. The next would be the term financing that we offer. So this would be for any asset that was medium sized. So your large line of credit or authorized overdraft would be for your day-to-day expenses. We hope to see it revolve once or twice a year. For the term financing, this is what you would do to finance, say, equipment, livestock, and to some extent for anyone who needs it, quota financing for dairy and poultry. The terms can be anywhere between 1 to 10 years, and that's going to be completely dependent on the age of the item. Most of the time, our breeding stock would be a 5-year term loan. However, new to 3-year-old equipment, we can do up to 10 years, depending on the price of it. And then your price would be either floating or fixed. So floating would be a prime plus, and with prime is about 5.2. So, that's 6.5 to 7% for equipment financing. And then we can do up to 100% financing depending on the age of the equipment. Usually if it was breeding stock, it would be about 75% as well. So, and this is something we also offer if you are a growing farm and you're needing to buy multiple pieces of equipment over a certain specific time frame. We would do what's called an evergreen. So if you're thinking you need to spend, say, $250,000 in equipment over the next 12 months, 24 months, something like that, what we would do is set up an evergreen, which would be revolving term loan. Basically, it would start at 0. You wouldn't pay interest on it unless you're using it. You find a piece of equipment, you provide me with the bill of sale, and then we'll either pay you back if you've bought it already, or we'll pay the vendor directly. And then as you pay it down, it's there for you to use again. So if you have a $250,000 line and you buy a $50,000 baler, then you've got $200,000 available for your next purchase. So we usually do it based on whether the farm can pay for the entire 250 or whatever your line is all at once, just to make sure that we don't want to strap your cash flow for that. And then it can be either equipment or land secured. Oh, there. Mortgage financing. So this would be when you are buying land. You can use land to finance just about anything. We can do now up to 30 years as the amortization, and we do need a 25% down payment. This would be based on either an appraisal or our internal land appraisal based on FCC land pricing. So if we also do offer, I like to tell people, because there's a lot of transitions going on, if you are buying family land and they are giving you a deal, say a piece of land is worth $500,000. I know that's low depending on where we're at. Say it's worth $500,000 and they're willing to give you, price it at $350,000. I would consider the $150,000 difference as the down payment. And I could do 100% financing that way. The family member would just have to give me what's called a gift letter stating they understand that the land is worth more than currently showing or currently asked for, and they will not be coming back to the buyer for the additional funds. You can also land secure purchases of other assets, cash injections, or larger lines of credit. And we do like to let people know that one of our good parts to our mortgage, a lot of places will allow you to do 10% of the existing amount outstanding. We will let you do up to 20% of the original amount of the mortgage as a prepayment without a penalty if you have a fixed mortgage. Basically, if you have the funds to be able to pay back the mortgage, you could pay it in less than 5 years without a penalty, even if it's locked in. So I always like to touch on the CALA loans. To tell you the truth, I don't do a lot of them just because I feel the government needs to change the amounts on this. We can do up to $350,000 for equipment and breeding stock purchases, and then up to $500,000 for land purchases. So depending on where you are in the province, that $500,000 might get you something, it might not. It does allow for a lower down payment than us. I do believe they only expect 10% down. It says longer amortizations. I do believe now that we've moved ours to 30 years, the amortizations aren't that much different, but then the interest rate is set at prime plus 1. There are fixed rates based on our fixed rates in-house. I do believe the interest rate at prime plus 1 is probably still the better bet. It is something that helps someone get started. I know the one we're looking at right now, like our equipment financing is quite good in the market. So I've never done a CAL loan for equipment. However, it might be a really great place for a young person starting into cattle or livestock. Great way to get livestock financing without having to go through a breeder or a feeder financing, and then it allows for that low down payment. So next. So these are some of the requirements that we would need you to bring in. This is pretty much what any financial institution would need. We would need 3 years of farm income statements. So this is either if you farm in your personal name, a personal income tax with a statement of farming activities, or if you're a corporate farm, the financial statements. And the reason I like to bring in 3 years is because the volatility of cash flow for the farms. So I like to do a 3-year average of cash flow for a farm just to show that there is, there is cash flow coming in. If you have one bad year, we want to see 3 years so that we can prove that the farm does make money. We then ask for a farm asset and liability listing. If you're a corporate farm, that would be within your balance sheet of your financial statement. However, I do have a Excel spreadsheet that I'd be able to give to people who do farm in their personal names to be able to fill out. Information on what's being used as security, whether it's a bill of sale from the piece of equipment, information about cattle and inventory that we're holding, or the land you're either using to finance or purchasing. And then if you are incorporated, the one last thing we ask for is a personal net worth statement. Once again, I do have a blank copy if anyone wants to see it. And basically we do that because we always take personal guarantees for a corporate farm. I do like to touch on this a little bit. This is something that just about 2 years ago, Servus purchased Stride Leasing. So we do actually have an in-house leasing product that allows you to finance, you can either finance new